Is value investing dead? Hi, my name is Gary Mashurs. I'm the managing partner and chief investment officer of Silver Ring Value Partners. I also teach the value investing seminar at the FW Olin Graduate School of Business. So recently, we've been hearing a lot of questions and a lot of articles. Value investing is dead. Is value investing dead? What killed value investing? And one of my favorite signs of the time is that people on social media are questioning Warren Buffett's investor. And usually, given that he is one of the top 10 richest people in the world, they're not saying like he's a bad investor. He's like, they kind of say, well, he's past his prime. He used to be good. Now, maybe not so much. Look at his last 10, 15 years. He hasn't beaten the market. And I'm here to tell you guys that value investing is totally not dead. I think the very fact that people are questioning it is evidence that it's alive and well, because look, at its heart, what is value investing? It's the act of acting like a business person, evaluating the intrinsic value of your potential investment, and then buying it with a very large margin of safety relative to that estimate of value. How could that possibly be that? What's the alternative? What the alternative is not deeply assessing the value of potential investment and just speculating and buying it based on, I don't know, charts, or is the alternative not to require margin of safety and to buy companies that are growing at any price? Well, guys, that's been tested and it doesn't work. The Nifty 50, which is a situation in the late 60s where people bought glamour stocks, which were well-known blue chip companies, regardless of price, didn't work out so well for people. And neither did the late 1990s. And a lot of times there's this, well, in value investing used to work, but things have changed. So things have not changed in a very important sense that if you do thorough analysis on what the value of the business is and you buy it at a deep discount, you're going to get rewarded over time. Now, maybe what has changed is the competitive position of some businesses. Some new industries have emerged that have both hurt others and also made attractive new business models. That's all possible, and I think it's our job as value investors to go and incorporate that into our analysis, into how we think about companies and potential investments. However, it's, I think, crazy to think value investing is that. And I think part of the reason that value investing works. Let me tell you a quick story. When I was starting out, this is over 15 years ago, I went to a value investing conference, and there was a very famous value investor that showed that most decades, or the vast majority of 10-year rolling periods, value investing has beaten the market. And I came up to him afterwards and I said, well, how come, if it's so obvious, why doesn't everyone do it? And the answer, he said, is, well, look, it doesn't work every shorter period of time, and then sometimes it doesn't work. And therefore, if you don't have the longevity, whether it's career-wise or with your clients, you get fired. And so people don't want to get fired. So they try to find something that works better in the short term because they don't like the lumpiness that occasionally value investing doesn't necessarily produce returns in the market that are all that wonderful compared to other approaches. But if you look at the very long term and you compare the value investing approach to almost any other, it has done extremely well. So I think that before you start questioning whether Warren Buffett is still a good investor or whether value investing still works, just think from first principles, right? If you're right in your assessment of the business, approximately, no one is perfect, and if you understand roughly the range of values for the business and you buy the investment at the low bound or below the low bound with very low downside if you're wrong and fairly attractive upside if you're right, and you do that repeatedly on different businesses that are only somewhat related to each other over a long period of time, how can that not work? It just would make no sense. So yes, there'll be a period of time where there'll be, technical analysis will work well, or everyone will pay 10 times revenue for money-losing companies that are growing quickly temporarily, but that growth is profitable or not. That will happen, and that's our job as value investors, is to persevere, stick to our process, improve our process, be mindful of the changes that are happening around us, but certainly not lose faith in the very basic act of comparing price to intrinsic value and doing deep fundamental work. If you like this video, please hit like and subscribe to my YouTube channel for more educational content on investing. Thank you, guys.